Broker Daily Uncut.
Broker Daily Uncut.
News, views and opinion about what's shaping Australia's mortgage and finance industry.
Before we start, a quick message from UBank. UBank is helping brokers bring better value to the table with no LMI home loan options for smaller deposits. So visit ubank.com.au/broker to find your local BDM to see what the award-winning team can do for you. UBank is a part of NAB. Credit criteria applies.
UBank, money done better.
Welcome back to another episode of Broker Daily Uncut. I am your host, Julian Barnes. And today, as always, I've got Costa from Finni in the house with me. Guys, how are you? How has your week been so far?
Good morning, Julian. Good. It's been a good start to the week, and, best part of the week is being here in the podcast.
Oh, don't. Yeah, well, it's finally warming up here in Sydney as well, which is, as a Brit, I can say is very, very good. But what's kind of not been warming up quite as much as potentially some brokers and some sellers would want is the auction clearance rates. So we always like to start there. So preliminary auction clearance rate from Catality's come in at 53.2 compared to the 56.5 for the 2 weeks prior. Sydney was the only capital where the clearance rate's kind of risen a little bit. We've seen the number of homes taken to auction increased a little bit, 1,400. So still a bit depressed even for this time of year. But yeah, some interesting stuff there. We've also seen obviously more and more results come out as well, guys. So there I want to start the story there in the podcast. Obviously last week, I think we saw NAB, CBA, ANZ, all of them either posting quarterly or half or full year results. And we're starting to see some quite big slumps. Most importantly, I think Equifax came out with theirs saying 16.4% annual fall in mortgage demand in the 12 months to July. RBA's also warned it. But then we've also seen non-banks do relatively well, posting some pretty strong results. Pepper Money, 63% lift in mortgage originations, 4.5 billion record in the first half of 26. Obviously, that's pre-budget. Liberty's also delivered a strong FY26, originations of 6.1 billion, including 3.5 billion in residential lending. Guys, what do you think about the economy right now? And how do you think it kind of plays into the kind of second and third tier lender right now?
There would be a lot of business that will be shifting to second and third tier lending. Even though some clients, especially first home buyers or owner-occupier, I guess, technically would prefer to go with a major bank, big four, big five. Sometimes they just can't. Servicing doesn't allow it. So the only option for them would be second and third tier. What we've seen, though, is in the past where they were a bit resistant to it. It's like, I've never heard of it. I just still want to go to a branch. I want to do this. I want to do that. I think the last few years from COVID actually has helped a lot. People accepting that, we can just chat online. We can just make a phone call and get it sorted. So they're a lot more accepting to, yes, you're going to go with a bank you've never heard of, but it'll be all right.
We'll be fine.
You'll be fine.
So you think there's a bit more of like a cultural shift of how people, I guess you have one side, which is like the brand loyalty, which you've seen eroded from the majors for a very long time, of people saying, well, I care about price, I care about context, I care about who's going to write me a loan. Obviously the broker channel helps that because broker's going to introduce you to a far wider range of lenders. Yeah. But you think from the consumer side as well, that's different?
Yeah, well, like Eva said, I think especially now, when clients are coming to us, the second tier lenders, because they've got high borrowing capacities, because they've got a 2% buffer, and in Liberty's case, they've only got a 1% buffer. So if anyone's got quickly, they'll see that they're always on top due to the fact that they've got that 1% servicing buffer. And I think it's just the way that things are at the moment that you need to start considering them, because now that we've got rid of negative gearing, your borrowing capacity has been smashed. So second tier lenders are much more part of the conversation. And as years go on, I think people aren't really caring anymore. I think like if you tell them, this second tier lender like a Liberty or a Resimac or a First Mac, they'll just go online, do a Google search and be like, yeah, these are, proper companies profiting quite significant amounts of money. So they're not just, some backyard job. And yeah, I think they'll play an important role going forward because they're key to people buying property now because of negative gearing. So I'm taking more clients to second tier lenders as we speak. Listen, you'd want to always take them to a major first, but if it doesn't service there, you're going to have to take them somewhere else.
I was going to say, obviously, you see amongst those second tier lenders that the brokerage channel is hugely important for them. They're not kind of pushing that proprietary narrative in the same way. How, and again, like there is that obvious, clear narrative that, the brokerage channel has brought in far more competition, and with 80% going through, it really matters who works with brokers and how they work with brokers. Do you think that the channel has introduced kind of more competition and allow kind of those second and third tier lenders to kind of make more of an impact in the space?
100%.
Yeah.
Yeah, because without the broker channels, they're pretty much reliant on their own marketing or channels to get clients. And it makes it harder. Obviously, for the major banks, that's a bit easier because they've been around for 100 years and they are major banks. So the broker channel has really helped a lot of these second-tier lenders. And because you got more people with an investor mindset where they don't mind going to these second-tier lenders because they want solution-based, they don't want cheaper rates in the end, they're willing to go with them. But when it comes to second-tier lenders, traditionally they do cost a little bit more in an interest rate, but again, they're solution-based.
The gap is closing though.
It is, yeah.
It's not as it used to be, and I think people understand now. It's not about the rate; it's about who will get you the loan to get the property you want.
Well, the property is going to do the heavy lifting for you. The rate's not going to make you the money. Yeah. In 20 years' time, you're not going to be like, oh, God, remember that rate that we had? You're not going to think about that. You're going to think, God, 20 years ago, I bought this for this, and now I've made $1.5 million on it. Cool. So the rate means nothing. The rate can always be changed, but the property...
Refinance is easy these days. So you can move on in the next 2-3 years once things settle a bit. Yeah.
That's interesting. Obviously, another part, I guess, going back to that broker channel is being able to kind of provide certainty and clarity. And that's something I want to ask you about on another bit of news that was reported actually on the Advisor this week. The MFAA has kind of come out and they're pushing Treasury for a bit more certainty around the budget changes. So specifically capital gains tax and negative gearing rules. I think they're going to be finalised. The full rules come in 1st of July 27, as we know, but there's a few kind of parts that need to be ironed out. I think one of the ones that MFAA was pushing Treasury for was the CGT rollover relief. That's a major concern. There's a few different things there, which, as they said, like there's a lot of customers, there's a lot of businesses that really need the full clarity, the full picture. For you guys, when it comes to capital gains tax, negative gearing rules, all these things that are changing, where are the loose ends for you right now? Where do you need clarity right now?
The one we get asked a lot, I think for me anyway, is the valuation. So if people are keeping their properties, they are supposed to get a valuation as close as 1st of July 27. Yeah. Well, how many valuer is there? Like 600, I think, in the country for millions of properties. I don't know. We don't know that. It's like, okay, do you need a formal valuation?
They're going to get some serious business.
Yes. Do you need just a desktop valuation? Are you happy with
Well, that's probably the clarification they're after, because they haven't. They just said evaluation. Well, there's two forms of valuations. Which ones do we need to get? And this is where, and we're approaching that. We're less than like 9 months away, isn't it? 9 months away till next year, and mate, that will come pretty quickly. Yeah. And we still got no clarification on what sort of valuation. Does it have to be short form valuation? Can you just do desktop?
Yeah, any.
Well,
we know sometimes I've had the case where people were using real estate agent letter as a valuation to calculate the capital gain tax. Can we use that?
Really? Yeah. Well, why not? Yeah, exactly.
So it's like, what do we need? Because if you have 2 million valuation happening in June next year, it's going to be very interesting.
And I guess they want it to be as close to 1st July as possible,
correct.
Right? Yeah. And particularly with like the house prices are moving right now. It's definitely not a static industry. What you value right now is going to change.
Could probably do it like post that and backdate it.
You could, but
do we know that? No, we don't.
No, yeah, exactly. Yeah.
But again, in regards to the valuation, how close to that date does it need to be for them to actually accept it?
As well.
Are they willing to go 3 months outside? 3 months? 4 months? It just
and this matters hugely for the tax.
Massive,
Could be a difference in your bill.
Yeah. Well, if you purchase a property at the beginning of the year and say, for example, it dropped 10%, in 4 months, like let's say in 4 months it dropped 10%, but can you still use that valuation?
Yeah.
There's no clarity on anything. And as Eva was saying, like there's always those when we're talking to clients, they're like, oh, but what do we need to do with the valuation coming up to middle of next year? And I'm basically telling them I don't even know the details of it yet. I just know that one needs to be taken, but how that needs to be taken or done, just is anyone guess at the moment.
Yeah. One thing that has had clarity around it has been the controversial widow tax loophole, which obviously was a big worry for a lot of people. I guess when you're thrashing out these major policy changes, you are going to see these issues come up. It was amazing kind of how long it took for the government to move on it. But yeah, the it's been closed. So the negative gearing treatment will be preserved where jointly owned property is transferred to one spouse following death or let's say a relationship breakdown. How important is that for the industry? How important is that for the impact for residents? Because I guess it is protecting those kind of most vulnerable, really.
Yeah, but to me, I didn't even think of it because negative gearing was grandfathered to properties purchased before the 12th of May. So I didn't even think of it as a potential issue. Right?
No.
So when that comes up, it's like, it just doesn't make sense at all.
Yeah.
It's I don't know if they.
There were some
planned
strong
for that.
words in Parliament. I know that.
Yeah.
I think it's a sensible back down.
Yeah.
And
Had to be. Yeah.
you know what? They probably knew it as well, and they're probably like, let's just chuck it in there, see what it is, and
chuck a lot
see what
in there.
happens. Because like to say that you and your wife purchase a property and then one passes away, and then you lose all benefits from that. Like that just that alone just tells you that it's just not fair.
It's amazing that it wasn't thought of earlier.
But see, this is the thing. We say that it wasn't, but is it something that they just threw in there and they're like, oh, we'll get
Let's
rid of
see
it
how
to
it
say we're
goes.
giving something back? I guess it's all part of the
It's
negotiation
part
sort of
the
mindset.
game of politics. Yeah,
100%. So it's good that they've gotten rid of it, but what it was there for at the beginning, no one knows.
No one knows. Guys, we'll take a quick break there. Back in a sec. So this is the moment from our sponsors part of the podcast. And you might want to listen up because Ubank could help you deliver even better outcomes for your clients, all without any extra effort. The Ubank team prides themselves on being able to make it easy to get your clients a great deal while making the process crystal clear for everyone involved. It all adds up to Australian brokers being able to close better value deals fast when they choose Ubank. But that's not the only reason brokers love Ubank. They've also got a really slick digital application, no LMI options, and they back this up with outstanding service. And if you need proof of this, BDM satisfaction among Ubank's active brokers was 92% according to their latest survey. Just another reason to drop the team a line. Head to ubank.com.au/broker to find out more. Ubank is a part of NAB. Credit criteria applies. Now, let's get back to the chat.
Ubank, money done better.
Guys, welcome back to Broker Daily Uncut. Now, fraud has come back up. Fitting, I probably shouldn't say fitting, but it is also scam week this week. So I want to talk to you guys a little bit about fraud and scams. Let's start with some really big news. So Austrac uncovered potentially hundreds of millions of dollars in suspected fraud. This came out just at the end of last week. Operation Claw, love the name, identified inflated incomes, false employment details, fabricated business activity across 10 major banks. They also found kind of flaws in some of the lenders in the way that they review their books, all sorts of issues. It's very much a developing story. Austrac's very much still within, in their investigation. But guys, let's start with your experiences, I guess. So in the world of kind of fraud and scams, what have you kind of seen in your own kind of professional lives?
Well, in regards to the scam side of things, with AI, obviously that's going to be increasing. You get, text to your phone saying, Commonwealth Bank, your loan's been approved, click this, and it's a scam. I haven't had anything like that personally or any clients, but going through your list here of what you're saying, and as you're saying in the intro, I think we've just struggled to keep up with especially AI on how easy it is to do scams now. The industry, and not just the financial industry, all industries are struggling to keep up with what's possible with AI in regards to scams. Offshoring and third parties, you're moving data from country to country. And it's just becoming easier and easier to do it because we're already behind the eight ball. They're well ahead of what's going on because once a new technology comes out, these scammers are basically finding ways how to use it to scam people. And then the banks in the finance sensible situation are just on the back foot from the get-go. And they'll always will be, like, because otherwise scams would have ended long time ago, but they just keep on appearing in different ways.
I think something that's quite scary about the scam thing. I remember like a while back, you remember the UX hack, and it felt very like, when the broking industry comes into it, when broker data is taken, you have this situation where the entire kind of trust could fall out the bottom, not by any one brokerage's fault, but by data breach or whatever. And that's where it can get quite scary, where the abuse of the trust of the channel is where the issue is.
Well, funny is that you bring that up. In my past life, I used to study cybersecurity, and one of our case studies was from a company in America. It might have been pharmaceuticals, but don't quote me on it. The hackers got into their system via their air conditioning unit system.
Well.
That's no joke. That was our case study that we'll study. So even if you've got everything at play, they will find a way to get in there if they really wanted to. Now, if you're a business, you're not thinking about what the aircon system's going on there. That's for another person to worry about. That's for the landlord or whoever owns the building. And then they gained access through the aircon, obviously, system, which I'm assuming that was connected to that company. And then they got all their data and then they held them up for ransom. So, it's not just the individual company, it's a range of companies. And when you think as a business, all the companies that you deal with, there's like dozens. And then you can't control what they do. You've just got to hope that they've got their systems in play to stop that. So
it makes me glad my air conditioning's broken. So I'm all good. Eva, what's been your experience?
Yeah, I've had a few, two of the same actually, of a huge scam happening to my clients where they bought a property. We've been going through the process of finance, gone unconditional. And then the client gets an email from their solicitor saying, hey, settlement is happening in 3 days. Here's the remaining funds you need to transfer to our account. Perfect timing, same email address, or what seemed to be the same email address. Clients transfer money. 2 days later, I call the client, say, hey, you still haven't, looks like you still haven't transferred money to the right account. What's going on? Oh, I've transferred it. Where is it? Let me log in. It's not there. Then realize that the email that he thought was from his solicitor, let's say called Eva, the A wasn't on the A, but like different letter or whatever it is, different Greek alphabet or whatever it might be. And obviously everything was fake. Money gone. Right? So what happened to this client is it took almost 2 years, I think, to get his money back. So we had the loan at 80%, the money is gone. We had to redo the whole finance at 95% because he didn't have enough funds to purchase the property anymore. So it was an extremely stressful time because not only he lost, I think it was almost $80,000 and could have lost the property as well if he didn't have more funds to actually make it work. And this happened twice. So I think there are like the three things to look out for from that is people can look at what's going on in your life through your inbox and know exactly what the timing is, because that was a perfect timing. Twice this happened.
Yeah.
Two, they know exactly what emails you're receiving it from. And I was copied on the fake email. Wow. So it copied everybody that's supposed to be involved, just changed one letter. Mm-hmm. And three, there was obviously time pressure there.
Yeah.
So I think that's what people need to look out for is...
but see, they would have been in that system for a while.
Yes. Yeah.
It's not like they just rocked up on a Monday, saw it and sent it out.
That's the thing that you have to realise now is there's kind of two elements. Is firstly, these are career people that will do it.
Yeah.
This is not a hobby. They spend all day. And secondly, the capacity that technology, AI specifically, will allow you to move forward. I've heard of similar scams outside the banks where they, AI will allow you to keep up. And also you think maybe they tried 1,000 times to get that one person, but it's easy to do 1,000 now, right? You used to have to rattle on 1,000 doors. That would take a long time. As of now, that you do that in in a second.
Well,
split
yeah.
second.
Yeah. So it was quite dramatic. And one of those two clients I had, one of them is in the property industry, has done many transactions before. Type of person you would not think would fall for this. But, it's like, oh, yeah, no, I need to transfer money. Yeah, this is from my solicitor.
Yeah.
Sounds about right. Done.
It becomes procedural, and
Yeah.
then,
Yeah.
and then it
Yeah.
becomes an issue. And sometimes I think the
Yeah.
people who don't know what they're doing are sometimes less
Yeah.
vulnerable because they're like, I don't know what I'm doing. Like I check everything.
Yeah,
I
they
double
check everything. They call.
Yeah.
If there's a change as well of you transfer money on this account, day one, and now it's a different account, you might want to question that too.
What do lenders kind of, when they're corresponding with brokers, what are they kind of recommending you guys do? What's the kind of stuff, particularly given the awareness to it right now?
I think it's a bit back to this. Is like check where it's coming from, and sometimes it's hard to spot when it's just one letter, one number added to it, or it's not cba.com, it's cba.com something else.
Yeah.
So you don't really look at the whole email sometimes. That I think the time pressure, it's like, oh, hurry up, you've got settlement coming up.
I think
Sometimes
that
it's like
gets
in a
lot of
week,
people.
you still have time. And change of when they ask you to change data or their data has changed and you need to do something about it.
Yeah, it's kind of those points of vulnerability are the points where you kind of almost need to slow down or at least double check.
Well, I always say to clients whenever it comes to that and it comes up in conversation,
Sister.
call your solicitor.
Yeah.
Double
Even
check.
myself, when I was building, every time I got an invoice from the builder, I would actually call them up. I'd be like, I'm just confirming, because you're talking about a lot of money. And then they actually changed their account over. And then I actually called up and go, did you change your account? They're like, yes. I'm like, and I actually told them, I'm like, you can't just send an email to someone going, hey, we've changed account details and think people aren't going to think this is a scam. Like, it looked like a normal email, but like, it's just, you get a message from a builder going, oh, we've changed account details. Like, really?
Yeah.
But yeah, I would always recommend just calling up and confirming account details and doing it over the phone. It may take an extra 5 minutes, but you may have an extra $100,000 in your pocket.
Yeah, absolutely. Just cover your back. Guys, let's take a quick break there. I might make some calls. Welcome back to Broker Daily Uncut. Now, for the final part of the podcast, we always like to have a little look at policy and things that have changed. Obviously, I round up policy each week on a Friday, but things have already moved since then, which is always fun. So let's start with what NAB has been up to. So maximum rental yields that can be used for servicing will increase from 6 to 7%. Guys, what is this going to mean for investors? And also, I guess, what does this kind of reflect on the market more generally? Why is NAB doing this at this time?
There's two things there.
I'll let you do it.
And we've mentioned that in podcasts before. Banks will find ways to increase servicing capacity despite everything that's happening. And obviously moving from 6 to 7% yield will open up doors if you can get obviously 7% yield. I guess what that also says is that they are expecting yield to go higher, which means they're expecting rent to go higher. Is that a direct reflection of what the budget is creating into the rental property market?
Are you saying it's going over $2 a week?
Well, 6 to 7%.
$2 an hour, I reckon.
No, it would reflect that it's something they think will happen, or that 7% yield would become more and more.
So it's kind of a mix of kind of what they see as wanting to reflect reality a bit better of where they think they can hand
The
back
yield can
serviceability
go.
over time.
Yeah.
Yeah. I think yield will start going up. I think it was a couple of weeks ago, and we mentioned last week on the podcast, Domain came out saying that rents had already gone up. I think that's just the reality of what's going on. As much as people don't think it will happen, it's happening, and NAB's reflecting that, and it's good. It helps servicing. Again, it's not massive, but an extra % that you could use towards servicing is always going to help from your rental income. So yeah, I think it's two things at play. Yields will start eventually going up, and as well helping get those servicing capacities up because it's been reduced from negative gearing.
Yeah, and I guess
goes hand in hand with what happened with Westpac St. George, upping to 95%.
Yeah, I
of
wanted
their
to mention that
rental.
to you guys because obviously I think we touched on it last week, but it wasn't fully confirmed. But they have come out and confirmed the whole thing now. So yeah, they're recognising rental income from 90% to 95%. I think on category 9 postcode properties, so not all of them. Some of them in more regional areas, I think that the shading is a bit lower there. But still, that again will just hand back a bit more kind of servicing capacity. Would it say kind of achieves the same goal as NAB's policy change?
Yeah, totally. Just different ways to do it, and I think it does show as well. I guess trust into the rental market being really tight and people not having vacancies for very long.
Yeah. And I must say, Eva did call it when we started the negative gearing. When it all came
Thanks,
out to
Costa.
play, she's like, I bet they're going to increase it. So credit to you.
Yeah, I wonder where the other lenders are going to move on this. And
Oh,
how we're gonna
they all
see.
will.
Yeah.
Slowly. They'll catch up.
Just slowly. We might see 8% at some point from that. I don't know. On another one that's kind of handing it back, I guess, for different customers is ING. So ING been in the good books of brokers since the clawback changes, definitely. But they've changed their casual income. So casual income can now be assessed using 52 weeks of earnings. I think, what was it before? Was it
48.
What's that going to do? And who are they kind of trying to target there? Without getting you guys to stay out of the office.
Again,
Casual employees.
Yeah. Again, it's going to help. And I think 52 weeks is more reflective of sort of what a lot of casual employees work. I know you can say, they may take holidays and all that. You do need 6 months or more year-to-date income. So they'll be able to assess if you've taken any holidays due to those year-to-date numbers. I just think it's a policy which is just sort of reflective of the reality of what's going on in the world at the moment. There are a few lenders that have done that previously over the past, say, 6 months to a year. So I think ING are just catching up as well.
Yeah, I was going to say they don't seem the first one to move on that. And I've talked to some lenders before where they are saying like we're seeing more complex lenders. We're seeing lots of different kind of income scenarios, which banks, admittedly, when there's a higher rate environment and mortgage applications are down, they're going to start looking at those kind of different borrowers and being like, well, hang on, these aren't necessarily risky. It's just how we're assessing it.
Yeah, I think it's also pushing or trying to reach the first home buyer markets where people might be a bit younger, in not so established job, casual job, and obviously when you get rid of 4 weeks worth of income, it's a lot. That it would affect the servicing. So I guess they're trying to look at, okay, well, potentially what the budget is trying to do is get the first home buyer out there and buying, and that will help them.
Yeah, absolutely. This one was interesting, I thought, that I'd just touch on. Now we're talking about kind of younger buyers. So this is some research from Great Southern Bank. It found that millennials are actually most likely to enter the market with a larger deposit, with a 16 to 20% deposit, according to their research. Gen Z buyers are most likely to put down 11 to 15, while baby boomers were most likely to put down 5 to 10. I guess, that seems different to what I thought it would be. That seems the other way round, but it's quite an interesting kind of bit of data there that.
They stay at mum and dad, they can save.
Yeah, true.
Yeah.
Yeah.
I guess they don't want to have those massive bills.
They're probably
coming
can't afford
through.
to actually go out and
Yeah. Right, well, guys, we should finish off. Let me just quickly ask you about white labels, because it seems like every single aggregator is pumping out white labels at the moment on loads of different things. Two quite interesting ones, I think. So Finsure has launched Finsure Loans Ascends. So that's backed by Australian Secure Capital Funds. So it's a private lender. So that's going to have bridging finance, first and second mortgages, short-term business loans. And AFG's also done AFG Home Loans Bridge, so more bridging loans with Bridget. So I guess firstly, what is the benefits for brokers around white labels? And on top of that, why are we seeing more aggregators kind of move into this space?
good question.
Yeah. I don't know why more.
Do you guys use them much?
Yeah, we do.
Yeah.
Yeah, I don't know why they would be moving into them. I don't. Yeah, I'll be honest with you. In regards to why they're doing it, I don't know. I guess that will be a question I'll be asking.
Money's always the reason.
I guess they have like a set of brokers there, and that work with them very closely. So if they can distribute these,
yeah, look,
through,
service
then it gives them,
service can be better. Rates can be a bit better. Sometimes we can push, black and white policies and be like, okay, it's great. Let's do it.
And I guess for the lender, it kind of streamlines it. They don't have to do all the distribution themselves, right?
Yeah. I think for the broker side and client side, it's same. It's probably more to the lender side would benefit a lot from doing white label.
Yeah, that's really interesting. And what about bridging as well? Have you seen that go up at all? Because obviously we've seen upgraders.
Upgraders,
There's been all sorts
Yeah,
of
we've actually had a
things there.
few come across our desk, and I haven't had any, but one of our brokers keeps on getting them, and now he's the bridging loan specialist, as I call him.
I bet he loves that.
He loves doing them. But yeah, like I have seen a slight increase. I won't say it's like, becoming, very popular, but they are starting to creep through with some clients now, and
It's great timing for this. Like, it really is.
Yeah, it's interesting, isn't it? Because I remember when the market was a lot hotter. I remember talking to brokers in Perth, and they were saying, bridging loans doing really well because obviously people want to try and secure the next home before selling theirs because the market's so tight that we don't want to. And then the market slows down, and I was like, bridging loans doing really well because we need to I'm like, this is such interesting. Like, it's a good time to be a bridging lender, it seems.
yeah, well, I think Bridget's that. Like, they just specialize in Bridget loans. So yeah, I'd like to see their yearly reports next year. But it's slowly creeping in, and there are more and more here and there. And I think it'll probably increase throughout time because people are just buying before they're selling, and especially in a market like now, they're probably doing that more often.
And I guess used well, it doesn't have to cost the earth, and on top of that, it can kind of help you to achieve your goals. Make sure
it's a solution to a problem. People really hate it and go, I'm never going to do that. I'm like, well, like, you don't want to because you do pay a lot of interest, but if you have to, there's no issue on it.
Yeah.
As long as you can obviously service and pay for it, there's no issue. You get the property, you can sell the property,
I think a great opportunity here where you could potentially, let's say, get in the locks market, they call it, like $2.5 $3 million property at, let's say, 10-15% less because the market is, a bit cool. Okay, buy at the, let's say, as it's going down. Wait a year to sell your current property, which might have gone back up by then.
Yeah. It's a gamble, Eva.
Well, even on the flip side, when prices were going up, if you wait too long, you're then just going to be like, well,
you just get priced out of your own market.
Well, that's it. You're like, well, I'm going to have to
well.
pay an extra $50,000 more. It's like, well, you should have just done the Bridget loan.
Yeah.
And, you pay, say, $10,000 or $15,000 for that extra month, and you've got the property. So, like I said, it's not a bad thing. Like LMI, a lot of people don't want to pay something for nothing. But they're solution based, and I'm definitely all for it if you need it.
Yeah, absolutely. Guys, let's leave it there for this week. Thank you so much for joining me.
Thank you,
as
Julian.
always. If listeners want to find out a little bit more about Finni, where is the best place for them to go?
Finni.com.au.
Ideal, as always.
Easy.
Easy peasy. And as for Broker Daily, that's brokerdaily.au. Thank you very much, guys, for listening or watching, and I'll see you next week. Not only do Ubank support this podcast, but they also support brokers with award-winning service. And they've got some great low deposit loan options, so your clients will love them too. So, to unlock a better broker experience, visit ubank.com.au/broker. Ubank is a part of NAB. Credit criteria applies.
Ubank, money done better.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.